Electric vehicles have been widely touted as the future of the automotive space, but as sales growth slows, are EVs still an investable trend? Joining us now to discuss, David Mao, VP and Director for Portfolio Research with TD Asset Management. Great to have you back on the show.
Thanks, Greg. Great to be here.
EVs have been an interesting space. Obviously, there's been a change in Washington in the tone towards the electric vehicle industry. It's having ramifications. I want to start with Tesla, coming out this morning with record revenue, but slowing sales as well. What's happening with that name?
Yeah, I mean, Tesla is experiencing a lot of impacts from tariffs. Their operating costs have gone up quite meaningfully, which is why, even though they had very strong free cash flow, the earnings weren't as good as what people were hoping for. Just a couple of weeks ago, and this might help them, I think, in at least the near future, is that they had finally announced the launch of their new lower price electric vehicle. I mean, for years, Elon Musk has been promising everybody that Tesla would come out with an EV for $25,000, and that's been going on for years. Finally, they've come out with pricing and details about the new car, and it's going to start at around $40,000.
So yeah, it's perhaps less expensive, but not the $25,000 price point perhaps promised.
Yeah, so I mean, this new model, they're calling it the standard model. It's basically a lower price version of the current Model 3, which is a four-door sedan, and the current Model Y, which is a four-door smaller SUV. And the prices for those are about kind of $5,000 to $6,000 lower than the existing models. So these new models are I mean, they're meaningfully cheaper, but they also come with a lot fewer features that the existing models have. So, the new standard model is going to have a smaller battery, so that means less driving range. It's going to have fewer comfort features. They won't have leather seats. The wheels are going to be a bit smaller. So they're doing everything that they can to bring the price down. One interesting thing that I kind of noticed is from what I understand, the new standard models don't come with an AM/FM radio, which is kind of odd.
I heard that as well, and I thought, how much can an AM/FM radio cost seriously in 2025?
But I guess every little bit helps. Yeah. So good on them. And I think Elon Musk is quite optimistic that these lower price models are really going to broaden that consumer base that Tesla can go after. I think that's probably true in North America, so US and Canada. Having a $40,000 electric vehicle price that's a Tesla could be appealing for a lot of people. I think outside of North America, though, in Europe and in Asia, the competitive environment there is a lot more intense because there's a lot of Chinese EVs that are in those markets already. And those Chinese EVs have comparable or better features than this new standard model, and they're already priced lower. So I could see Tesla, gaining some advantage in the North American markets, but it might be tough for them outside of North America.
Now, when you think about the North American markets, as we were alluding to off the top, Washington, I mean, the winds have changed in terms of how they feel about electric vehicles, how they feel about supporting that industry.
Yeah.
So we saw some pull forward in sales. What do we think going forward?
Yeah, so you're talking about the federal EV tax credit that was in place up until September 30th. And that credit has been, like you said, pulled or removed by the Trump administration as part of the One Big Beautiful Bill Act. So it was a $7,500 credit, which was really supportive for EV sales. And now that that's gone, it's exactly as you said. There was a huge pull forward of demand for electric vehicles in the third quarter, particularly September. September was a record-breaking quarter in the U.S. for electric vehicle sales because people wanted to take advantage of this $7,500 credit. So it ended September 30th, and the outlook going forward is not great, I would say. It's widely expected that EV sales are going to drop significantly in the fourth quarter. We're only in October right now, so it's been less than a month since the credit was ended. So we don't actually have any numbers, but I did see the CEO of Ford say that he expects, EV sales to fall maybe around 50%. Wow. As a result of this tax credit going away. Drop. So it is very meaningful, yeah.
Let's talk about here at home, Canadian EV mandates. Perhaps they're in question too.
Yeah, so recently, I think it might have been in September, Mark Carney, our Prime Minister Mark Carney, temporarily paused Canada's EV I guess, mandates or targets, because originally Canada, we're working towards a zero emission future, and the goal was to have all new cars sold by 2035 to be zero emission vehicles. And along the way, there were some milestones. So by 2026, the target was 20% of all new cars sold to be zero emission. By 2030, I think the number was 60% all new cars sold would be zero emission, and then 100% by 2035. Well, I think the government has realized that the pace of EV sales right now, I think last year EV sales in Canada was less than 10% of all new car sales. And that 10% includes hybrids. So it's not even 10% were zero emission vehicles. If we're talking zero emission, like pure battery powered vehicles in Canada, it was probably less than 5% of new car sales last year. So I think the government looked at these numbers and said, yeah, there's no way that number is going to jump up to 20% by next year. So they did pause these targets. They're going to take time to reevaluate the targets, maybe amend the timeline. And they also want work with the industry to kind of come up with ways to reduce costs, right? Make EVs more appealing. They also still need to work on infrastructure, charging, and all that. So I don't think the target is going to go away, but how we get there and the time it takes is going to change. So that's kind of where Canada is now. It's also actually really good news for the automakers that sell cars in Canada, because under the previous targets, they would have to face fines and penalties if they didn't reach that 20% sales target.
Yeah, and it's a tough choice to make, right?
Yeah.
We might, in my family, well, my wife's already in the market for a new car. I say, so we might be in the market for it when she convinces me, but I start laying out prices. I said, well, you want an internal combustion engine? It's this. You want to make it a hybrid? Yeah. Add $8,000 to it. You want to give full EV? Add $12,000 to it, right? She's like,
Yeah, and Canada also, I mean, we also had a federal tax credit, but that ended in, I think, January. So we've lost some support, or the EV industry has lost some, supports and incentives that had made EVs more attractive to consumers.
Interesting space. And of course, the Detroit automakers aren't ignoring the trends as well. I think GM, the latest, has sort of pulled back on their EV strategy, and that means shutting production as well.
Yeah. I mean, there was a big headline, I think it was last week, about was it Stellantis? Or no, sorry.
Stellantis, which used to be the Chrysler plant in Brampton, where a lot of my buddies' dads worked when I was growing up in the 80s and the 90s there.
Yeah, and they're gonna shut production at that Brampton plant, move operations to Illinois, and I think that surprised a lot of people, because over the last few years, I think Stellantis benefited from a lot of subsidies from both the provincial and federal governments for them to keep operating in Canada, and for them to just all of a sudden shut down. It's going to affect 3,000 jobs, which is very meaningful, right? So I think there's some ongoing discussions, as far as I know, between Stellantis and the government, trying to figure out what to do with that Brampton plant going forward. The company did say that they're still committed to Canada, but we'll see. But as far as GM goes, yeah, they did announce a pretty big charge of $1.6 billion related to their EV assets. And what that charge was related to the revaluation of some of their electric vehicle assets. So, plants that they had built that were underutilized, manufacturing equipment that they have on hand that is not being used. So they'd have to take a valuation charge against that. But I mean, that being said, GM was just out a couple days ago with their third quarter results, and the results were actually very good. Now, it was good because they saw a big jump in the number of gas-powered SUVs and trucks that they're selling. The EV segment is still losing money.
Wow. So we put it all together, and there's a lot there for the industry. What does it mean from an investing perspective? We're talking about EVs.
Yeah, I think for investors, the auto industry is still going through a bit of a tough time. I mean, the consumer isn't super healthy right now. We still have Trump's policies on trade and tariffs that change quickly and often. So it is the environment is still very uncertain. We still have persistent inflation. Things like that are all kind of working against the auto sector right now. So, I mean, just at a high level, I would say, it's going to be challenging for the automakers, at least for the near term. So I think things probably get worse before they get better.